How do we play them? I teach my traders that if a bull elephant bar forms in your stock, whether you are trading a 5-minute chart, are there intraday traders here? Yes? All right. What time frame do you trade when you trade intraday? 15-minute, 5-minute, some people trade 2-minute. Whatever time frame is your favorite time frame, you're going to wait for a bull elephant bar to form. And if one forms, I teach my traders, you buy into the bull elephant bar. You do not wait for the bull elephant bar to stop trading. You buy into the bull elephant bar right before the end of its formation. So if this is a 15-minute bar, you're going to buy in the last minute of that 15-minute period. You don't want to buy 4 minutes into a 15-minute bar, because if it looks like this 4 minutes into the 15-minute period, it could end like this after the full 15 minutes. So we want to make sure that this bar is going to close a bull elephant, and we wait toward the end of its formation. If this bar is a 5-minute chart, 5-minute bar, in after 4 minutes or so, 4 minutes and 30 seconds or so of trading, and it's still a bull elephant bar, you can buy into that 5-minute bar toward the end of its formation. If you are a swing trader or a core trader and use daily charts, my wealth traders will buy into this bar, this daily bar, in the last 15 minutes of the trading day. Not at 12 noon, not at 1, but 4 p.m. Eastern time. They buy into this bar. They buy into a bottoming tail bar toward the end of the bar's formation. They buy into green bottoming tail bars. They buy into red bottoming tail bars. They buy into no color bottoming tail bars. The color of the tail means absolutely nothing. It's the tail portion that is the important element here, the important item here. So we buy into this bar. Now, get this. There are times when my traders know that I want them to take their whole account. So let's say a trader is trading with $125,000 in buying power. I want them to take the whole $120,000 and buy the whole amount I want to dump the whole amount into that bottoming tail bar. And if they go, I call this the kamikaze buy. When they do a kamikaze buy, their stop must be under the bar they just bought. The bar they just bought is the reason for the buy. Why would you want your reason to disappear? You do not want your reason to disappear. So the stop goes right under your reason. Now what this does, ladies and gentlemen, is this guarantees that the maximum loss you will ever have is a 1-bar loss. But when you win, you'll have a 40-bar win, a 25-bar win, a 13-bar win, an 18-bar win. But you will always only lose 1 bar. What if you, for the rest of your trading life, dedicated every trade with this philosophy? I will never lose more than 1 bar on any trade. What do you think that right there would do to your trading? Stocks go up by themselves. They don't need any help from you, right? So the ones that go up are going to take care of themselves. The ones that go down will just get stopped out at 1. You could literally throw a dart at a stock page, pick a symbol, right? Wait for a bull elephant bar to form, or wait for a bottoming tail bar to form, buy it, put a stop under the low, and that could be your trading system. And as long as you are strict with the 1-bar stop, your wins are going to take out those 1-bar stops in spades, because there'll be multi-bar run wins. Now, if my traders are not putting everything into one of these bars, that is not where the stop is. Stops are only placed when they have placed their last buy. So sometimes we ease into a play. We buy bull elephant bar, buy a quarter. Bottoming tail bar, put another quarter into that one. All right? Green bottoming tail bar, put another quarter. No color bottoming tail bar, put the last quarter. That last buy, now the stop goes under the last purchase bar. Does this make sense? Yes? No, maybe a little bit? Huh? All right, okay, well, we'll get there if it doesn't make sense. So what I'm telling you is that if we buy everything all at once, the stop goes under the bar we just dumped all of our money into. If we're nibbling, we must wait for the last purchase. And after the last purchase, we put the stop under that bar. Now, if we're shorting the market, we do the same. We sell into a bear elephant bar toward the end of the bar's formation with a stop above the high if it's a kamikaze. We sell into topping tail bars with a stop above the high if it's a kamikaze. We sell into red topping tail bars, no color topping tail bars, and even green topping tail bars. Now, let's talk about the bull elephant bar. Take a look at this. Now, I know this is going to be hard, but I want you to look at this chart and study it for a few seconds and just try to find the biggest, tallest green bar on the chart. Got it? Okay. I made it very obvious for you. The beautiful thing about bull elephants and bottoming tails, guys, is that they can only be created by institutional agreement. Think of this for a second. Let's assume that every stock has 10 institutional players that play the stock. Each institutional player has $1 billion that they use in that stock. That's a pool of 10 billion. But if 5 of the institutions are buying, 5 billion, and 5 of them are selling with their 5 billion, will the stock move? No. There's equilibrium between your institutional powerhouse. 5 billion buying, 5 billion selling, stock does not move. But if one of the sellers stops selling, now 4 are selling, 5 are buying, what color would start to emerge a little bit more? Green. But then what if 4 of the 5 sellers stop selling? Now there's 4 on the sidelines, 1 still selling, 5 still buying. What color shows up more? Green. And what size will the green start to produce? Bigger or smaller? Bigger. So the bars on your chart will start to get bigger because the numbers of institutions that are on the buy side are greater than the numbers of institutions on the sell side. And their footprints, they wish they could hide them, their footprints show the balance. So if you're looking at a chart and you see it peppered with bigger green bars than red, you know where the equilibrium, where the balance of power is. If the bars start to grow on the red side, it's like a seesaw. The buyers that were sitting on the seesaw here are now getting off the seesaw. One got off, the seesaw goes up. Another gets off, the seesaw goes up. Another gets off, the seesaw goes up. And then everybody's on this side. Does this make sense a little bit? Yes. All right, great. So here, clearly on this bar, every institution in this stock jumped in. You see, you can't create a bull elephant bar. I can't. If we pulled our money together, we couldn't. This means that all 10 institutions agree at the same time on the same day. And they're all hitting the buy button. You can't get a bar like that unless everyone agrees. And you buy toward the end of this bar's formation, you put a stop under the low, and there's your run. Now let's take a look at something less obvious. Look to the far left of this chart. Now I want you to see the size of your average green bars here. And then all of a sudden, the tallest, fattest, longest green bar in quite a while emerges. This is the first sign that elephants have stepped into the bathtub. I teach my children this concept that imagine an elephant. An elephant wants to get into the bathtub, but the elephant wants to sneak in without raising the level of the water. But can an elephant really do that? So what an elephant does is take 1 foot and try to ease it into the tub and hope that the rise in water is not noticed. So it's this first, he puts 1 foot in and says, stop. And so the water rocks a little bit, and when the water's calm, the other foot comes in. Boom! Now it's another. The bull elephant bars don't form next to each other. They're separated because the elephant puts his foot in and then waits for calm. And then the institution buys again and then holds off and waits for calm. And so bull elephant, boom, wait for calm. Bull elephant, boom. And then at a certain point, there can be no more waiting because it's like the stock gets ignited. And when the stock, after some accumulation by institutions, when the stock gets to a certain point in the hands of institutional buyers, it ignites and just starts taking off in an enduring up move. Now here's what my traders are taught to do. They're given a set of stocks, and they're told you are not to miss one bull elephant bar, and you're not to miss one bottoming tail bar, and you're to buy every single one. So my traders would buy this bull elephant bar, they would buy that bull elephant bar. Now I'll tell you another quick trick. They're also taught to add to the play once it's running as a winner. And the way they're taught to do this is with what we call an RBI. An RBI stands for a single solitary red bar that's taken out by a green bar. So look at this solitary single red bar. This red bar can be of any size. It can be tall, it can be small, it can be stubby, but it must be all by its lonesome. And if it's all by its lonesome, the next bar that takes out the high of a single red bar, they add. So do you understand the 3 buy points here? Buy 1, buy bull elephant bar 2, buy RBI, add RBI. Got it? All right, fantastic. Now, they're also taught that the bull elephants and the tail bars that are not theirs to buy are those that occur well above the 20-period moving average. So if you look, this was a very powerful, fat, giant green bar elevated way above the 20-period moving average. They're taught to sell into elephant bars way above the 20. They're taught to buy into elephant bars at or near the 20 or below the 20. So they'll buy an elephant bar below the 20. They'll buy an elephant bar near the 20, but they'll sell elephant bars way away from the 20. And this is their profit objective, their profit goal. Now, bull elephant bar, look at the bars to the left of it. It's clearly taller, fatter, stronger, bigger than most of the bars to the left of it. And where is it occurring? At or near the 20-period moving average. All right? At or near the 20-period moving average. Is this a buy bull elephant bar? What would you think about doing on this bull elephant bar? Taking some profits off the table. What would you think about perhaps doing with this bull elephant bar? Maybe perhaps putting some of it back on. In and out. So think of it this way. We get in under the 20 or at or near the 20, and we get out away from the 20. Right? And repeat. We get in on elephants and tail bars under the 20, at or near the 20. We get out of the play away from the 20. Repeat. In under, in at, and out over. That's excellent. I love that.